Hey everyone, earnings season is truly kicking into full gear this week. We got a bit of a preview of big cap tech earnings over the past week and a half or so when we've seen the markets dryer a little bit. We are now going into sort of the real thick of earnings season, and one of the stocks that's reporting earnings this week on the 31st is Meta. And I wanted to give you a bit of a preview of kind of how we see the stock levels to watch, I should say, through earnings. From a swing trading perspective, I typically don't try to put on trades before an earnings report, but I'll prefer to look for an opportunity afterwards just because of the odds and the mathematics behind that. But here's kind of what the stock looks like, and I think what's most notable here to me is, remember, the stock can do really anything after earnings based on what just a handful of very large institutional investors want to do. Some of them may want to take profit, some of them may want to buy, right? It really depends. The stock, however, is in a trading range, and I think that's really kind of where we can handicap the stock right now. So basically that trading range ranges from about, let's call it 413 on a low end to about 545 on the upside. So from sort of trough to peak of that range, that's about a 30-ish% range, which is pretty wide even for something like Meta. But I think what's really notable as well is that we've got essentially three reference points, or I guess two reference points, because one of them is really the same as the other. And those reference points are, for one, the 200-day moving average, which is that red line down here, which Meta's done a decent job respecting that moving average over the course of time. And then we've got basically the upper end of that trading range, which is basically so far, and again, this is so far, registering some sort of a double top. Now, double tops are not forever necessarily, but maybe this is an intermediate term double top. We will find out before too long is my guess. So I would say this: if this stock breaks above 540 on a daily closing basis after earnings, and again, that's a pretty decent move because right now that's about 17% from where I'm recording this right now. I'm recording this here early in the week. So it's still hard to know where exactly stock is, of course, right before earnings. But that's a pretty big move. But if it breaks above 540 on a daily closing basis, I think the stock probably goes towards 600 wouldn't be that far of a stretch. If, however, the stock fails to do that, and on the downside, there's really not that much room for it to break the 200-day moving average, that's about 8% lower, or below the range is about 10-ish% lower. So if it breaks below that sort of 425 to 410 area on a daily closing basis, the stock probably ends up being a short from a momentum perspective in the near term. If that were to be the case, then I don't see why it can't follow through by another 10-15% and get it back into sort of the low 300s. Let's call it 330, 340, 350 maybe, even that kind of area. So those are a couple of reference points that I think are interesting. There's a great deal of opportunity here using something called a poor man's covered call. Meta might be a perfect candidate for that after earnings. We're going to talk about how those trades work this week in our special research call. So make sure you join us for that. You can find out more about it, or actually register for free down below or on the next screen. Income is one of those things that a lot of people crave in the markets, and the poor man's covered call is an interesting alternative way of doing that. So hope to see you guys there, and have a great start to the week.